So there's the other part of this banking story that really is not getting enough attention, right? Over the last couple of weeks, I've talked about this a lot, right? The return of high-yielding CDs, right? Certificates of deposits. And many guests have actually also on this show recommended things like T-bills, which, of course, have been earning a lot more than just old-fashioned savings accounts. Now, my next guest has been hitting this topic hard as well. And I want to bring in Nicholas Wealth Management President David Nicholas.
Okay.
David, I know that you say that low savings rates can often it'd be a red flag, so to speak, of health. And I just want to point out, you have this. I'm not sure if David can hear me. Well, I'll keep talking, maybe as they keep working on his audio. Okay, so you got all of these major banks.
Now. I had to jiggle it.
You got all these major banks with the savings rates in at 3, near 4%. But then you have Wells Fargo and Citibank. I mean, these are paltry numbers. What's the story here, David?
Yeah, Charles, this is pretty fascinating. I was looking at this. There's a very big correlation between the health of a bank's held-to-maturity portfolio and the rates that they can offer their depositors. What's interesting is the larger the losses for a bank on their held-to-maturity portfolio, the lower their rates are. Just take Bank of America, for example. They've got $600 billion in their held-to-maturity portfolio, yielding 2% or less. $500 billion of that matures in 10 years or longer. They've got $2 trillion in depositors that they're paying less than 1%. So if you've got money at a Bank of America in a checking account or a savings account, you're basically bearing the burden and carrying the cost for Bank of America's bad investment decision with their low bond yielding portfolio. So these depositors are either lazy or they're stupid. And I think Bank of America is banking on that in order to stay profitable, that they won't move their monies, Charles.
Yeah, I think they're banking on that as well, or just simply uninformed. I want to bring up what's happened with the interest rates. It's not just the Federal Reserve here in America, where we were looking for them to hike rates about 100 basis points over the next 6 months. Instead, overall, they think rates will be down. But it's Canada, it's the Euro, it's the UK. So if central banks start to pull back on this aggressiveness, their hawkishness, what does it mean for markets, David?
Well, Charles, look, the Fed brought out the nuclear option over the weekend. Why would they pause or pivot? If they're so incredibly smart and what they did is going to work, then it should be status quo. Rate hikes should continue. So I think that there's a disconnect here. I think the market is just being skewed by the Fed coming in. Price discovery is basically destroyed. We cannot, privatize or provide value to our losses, socialize our losses, Charles, in a time like this. The Fed has really destroyed the profit mechanism to find out where's the real price for rates. So I think they go 25 basis points just to save face. But I think after that, rates are still going higher from here.
Hey, let me give you a quick shout out on the Nicholas Fixed Income Alternative ETF. I only got 30 seconds. It's been around. I think you put it out in play in November. What is it all about, and what makes it so special?
Charles, we launched our treasury fund. It was really because we had investors asking us, hey, I want to buy treasuries, but I'm not sure how to do it. So we created a treasury fund that has treasuries ranging from 6 months to 2 years. The yield on the portfolio is 4.5%. But we're doing something that's completely unique. We're doing an option spread overlay that can generate another 25 basis points to 0.5% per month. So really, we could get somewhere between 6 to 9% per year on a treasury portfolio that's 99% backed up in treasury. So we think it's a great option for investors that are looking for safety, Charles.
Well, people are looking for safety and yield, so it might be the ideal product. Congratulations, David. Talk to you again real soon, my man.
Thank you, Charles.
All right, folks.